Hey everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and why I'll take the data over the crowd's emotions any day of the week. So let's go ahead and talk about this. So going into yesterday, emotion had been getting generally bearish about Bitcoin. We had this drawdown from, this local top we put in at about 31K. A lot of people on crypto Twitter were saying that's it. This is the top. And now we're going to go back into the bear market. A lot of people calling for even new lows, going back down, retesting these lows, or actually even breaking them. But then, early on yesterday, we had this initial pump early in the day that put us up to around 30K. And suddenly, you saw a massive change in emotion on crypto Twitter. Suddenly, out of the blue, all these people who were calling for the doomsday scenario were now saying, looks like we're off to the races, calling for 40K, 50K, even all new all-time highs. But then in very short order, there was a massive dump on Bitcoin. We went all the way back down here. People saying, I was right. We are going down to that doomsday scenario. And now, of course, price is moving back up. So I put out a tweet yesterday where I said, this is why we have models. Because the emotion of the crowd is extremely volatile. It reacts to whatever the most recent price movement was, with people exaggerating and going all out and saying, this guarantees that we're going to all new all-time lows, or not all-time lows, but new lows for this bear market, or new all-time highs, for Bitcoin, just based on these tiny little movements. And so basically what I was arguing is we need to look at the data. The data is a better indicator of what's going on than emotion, because emotion is just immediate recency bias. It's just whatever just happened is what people are going to be talking about, and they oftentimes ignore the broader picture. So I shared this chart from our probabilistic forecast model here for Bitcoin. If you're not familiar, it's basically a model that gives you a probability of basically how likely is it that Bitcoin's price will be above where it is right now 6 months in the future. So it goes all the way from 0% to 100%. And you see it's done this great job of identifying these bullish and bearish periods in the market. And currently, what I mentioned in my tweet was that it's quite bullish on Bitcoin right now. It thinks that still the more likely direction for Bitcoin to be going is up, not down, at least if you look 6 months in the future. That's its forecast. It thinks being bullish more reasonable than being bearish. And so basically then what I was basically meaning with that tweet is that if you're just looking at emotion, you would be getting this whipsaw. You'd be kind of going up and down, and anyone trading based on emotion, unfortunately, there are a lot of people who just trade off emotion. They might have bought all the way right up here when everyone was getting mega bullish and all emotion was getting bullish up here at 30K. Then they might have just sold down here at 27K when everyone started panicking and saying that we're going to, go to lows, the new lows, all within the same day. And people would have lost about 9% in that move. So that's where I think it's useful to zoom out, look at what the data are telling us. And right now, at least from the probabilistic forecast model's perspective, all that doomsaying from this dip that even yesterday was kind of ridiculous. There wasn't really much reason for it. It just kind of said, all right, we're still in a generally bullish place. Not just generally, we're still in a quite bullish place, up all the way up at around, I think it was about 88% when I made this tweet. So obviously not financial advice. You should make your own interpretation of these data. But my main point there was just that if you're just following the emotion of crypto Twitter, they're going to chew you up and spit you out. Because emotion tends to be very poor trading strategy. It tends to get you in at the worst times and get you out at the worst times. And that's why I like having these models. So this probabilistic forecast model is not the only one we have. I think it's an extremely useful model. It's one that we're going to hope to add to our website soon. So stay tuned for updates about that. Because it tells you, I think, what a lot of people want to know. What is the probability of upside X amount of time in the future? In this case, 6 months. And this gives you that exact information. What is the probability? You can attach a probability to that outcome based on this model's estimate. And this is the only place you're going to find a model like this. Nowhere on crypto Twitter does anyone have a model that tells you this kind of, in my opinion, extremely important information. But that's not the only model we have, as I just mentioned. So another one I want to talk about briefly is our upside downside potential indicator, our risk model that we have at Polarity Digital, which is polaritydigital.io, which is our website. Definitely go check it out if you haven't already. Link is in the description. And so with a short-term UDPI, one of the things I had also tweeted about, kind of as Bitcoin was going into this second run here and topped out on the short-term UDPI at about 0.6, was that I'd like to see risk cool off considerably more before the next big leg to the upside. So if you're not familiar with this model, higher levels mean higher risk, lower levels mean lower risk. And in this kind of more recent recovery, off of the current bear market lows here, we've gotten up to about 1, and then up here we got up to about 0.6. So somewhere between 0 and 1 was where we kind of found our local tops. And our local bottoms tended to be down around here, about -3 here, again, about -3 here as well. So one of the things I talked about is I wanted to see short-term risk cool off down to these similar levels here before getting too confident of a sustained move to the upside. And indeed, what we actually ended up seeing was that this push up to 30, 31K didn't last very long. It wasn't sustainable. And this is something I'd said on Twitter before that move even happened. For a sustainable move to the upside to happen, I would have liked to see it start from a lower level of short-term risk. And so this kind of breakout failed, but risk now is still cooling off. And so what I'd look for is as risk goes down further, and maybe if we end up going back to a similar point over here, that might set the stage for a more sustainable push back to the upside for Bitcoin. So we know that the probabilistic forecast model is saying that bullishness, kind of a bullish bias, is still the bias it holds. So if that comes to pass, you might expect another leg to the upside. But when exactly that happens, kind of within that 6-month forecast, something I'm going to be looking for is the more that short-term risk cools off, the more likely we can have a sustained move to the upside. Now, this current push could be it, right? This could be the next leg up that we go to, but it's also plausible to me that we just kind of keep chopping around in this range for a little while. And if that happens, if that kind of chopping around continues, I'd be looking for short-term risk to get back down to kind of these points, and then maybe think that a next push to the upside is maybe going to be coming. So certainly it could come now, but if we get back down to this level, that's where I'd be really looking for that to happen. I think there's a reasonable chance that we just keep kind of chopping around here, but then once risk cools off to a sufficient degree, could get that next push up, assuming that nothing in the broader market ends up derailing that or kind of preventing bullish momentum from returning or from kind of pushing us to the next leg up. Now, the other thing I wanted to mention as well was the long-term UDPI, so kind of longer-term risk. This is risk that kind of plays out on a months to years basis. Short-term risk is days to weeks, so much shorter in its time preference. Now, the one bit of caution here, just something that we have to keep in mind, is that on the long-term UDPI, we're currently up at about -0.5. And if we compare that to history, that's not exceedingly high. Market cycle tops tend to be up at around, 5, between 4 and 5, more or less. And then kind of these intermediate tops that we saw here, over here in 2019, and then also what we saw in the push going up to November, tend to be kind of around 2. So we're not there yet. But I do think that if we get another push to the upside, so if Bitcoin breaks out, goes up to, into the 30Ks, a lot of people are calling for, 40K Bitcoin, getting back up to kind of this range up here. I think if we see that actually happen, and we see the long-term UDPI get back up to higher levels, if that pushes the long-term UDPI up to levels like here, between 1 and 2, like we saw back here in 2013, 2019, and then here in 2021, late 2021, that's where I'd start to maybe get a little bit more cautious and think that the possibility, like in 2019, of us catching a notable local top that's not new all-time highs, right? Not new all-time highs, but a notable local top before maybe having to cool off again. I think that would be more in the cards should the long-term UDPI get back up to that point. And then what I'd be looking for is kind of confirmation. How does price react to that point? And then also, what does our forecast model say? Does it suddenly start getting more bearish like it did here in 2019? Or does it remain bullish? Start getting more bearish, and we start seeing those signs, especially if short-term risk really gets up to these elevated points, like it did back here in 2019, similar thing. It gets up to these points, and the long-term UDPI gets up to those points. I think the possibility of a pullback is reasonable, especially in the backdrop of the more macro environment where, we've had a lot of leading indicators saying recession is coming. There could be some kind of alignment that happens there where Bitcoin catches a notable local top like in 2019 and then has to correct before maybe being able to ultimately kind of continue a broader bull market, assuming that that's in the cards. Because again, what we've seen so far is risk in the long-term UDPI got all the way back down here between, June and then back here in November, back down to these extreme lows that we've really only seen at notable low points in Bitcoin. So I think it's reasonable to think that this could be the bear market bottom, or at least a notable bear market bottom that's going to mark kind of the beginning of a new bull run for Bitcoin. But every time that's happened in the past, it takes a long time for that to form. And so I've seen people on crypto Twitter saying that new all-time highs for Bitcoin are coming in 2023. I'd be very cautious about that personally. I think a more likely scenario could be something like 2019 that leads into something like we saw coming out of it, a notable correction before we ultimately saw that actual big bull run afterwards. And so we'll have to see how things kind of shape up. And a lot of things are uncertain with the possibility of recession and some of those things as well. Kind of in the medium term, what I'm looking for is staying bullish in kind of the medium term, next 6 months out, watching for risk to cool off before the next leg up might be more likely. But then if it does happen, where do we get long-term risk going? And if we get back to these levels, that's where I'm personally going to get a lot more cautious about the any kind of rally being able to continue to move to the upside. So obviously not financial advice, but those are just some different factors that I'm looking at with our data. And again, in that broader perspective where, in my opinion, the data tends to give us better signal than emotion, which is just going to be whipsawing back and forth with every little move, and generally has very little predictive ability. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates for our indicators and more over there. And check out polaritydigital.io for live data from our models and more.